Welcome. In this video, will Zbcn coin explode soon? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The falling trend line, which is one of the most important structures on the chart, is still valid as of now. This falling structure represents a strong resistance zone that the price has repeatedly tested in previous periods, but has yet to break clearly to the upside. Especially in technical analysis, such long-term falling trend lines are of great importance to traders, because their break is often considered the beginning of a strong change of direction and a new uptrend. Therefore, every approach of the price to this trend line should be carefully monitored. The fact that the price has recently approached this falling trend line once again can actually be considered as a sign of a significant strengthening in the market dynamics. Although the trend line failed to be broken on this last attempt, the bold approach of the price towards this resistance may indicate that the willingness on the buy side is increasing and the seller pressure is decreasing day by day. So this may not be a failure, but rather part of a patient buildup and preparation for the upside. As the last contact shows, the price is very close to the limits of this resistance line. This proximity suggests that the level where the price was actually suppressed is now ready to be gradually overcome. The succession of contacts to the downtrend line, each time with higher lows, are important clues that the bulls are gathering strength and a breakout may be imminent. Moreover, each new contact to the trend line causes the seller's line of defense to weaken further. This is because in technical analysis, the principle of each tested resistance weakens after a while applies. So the more often this line is tested, the closer it gets to breaking. Therefore, the last contact should not be interpreted as a technical failure, but rather as a new breakthrough attempt in which the bulls showed their determination. Another positive development worth noting at this point is that the price is making shallower pullbacks after each rejection and quickly rebounding up from strong support levels. This suggests that the market is no longer willing to accept this resistance line any longer, with buyers eager to move the price up on each pullback. Such a picture usually occurs when the breakout is very close, so the market may be holding its breath, waiting for this important level to be breached. The fact that the price repeatedly comes back to this falling trend line doesn't tell us that the market is under pressure, but rather that it is accumulating energy, patiently preparing for a move higher. Such structures are called squeezes in technical analysis, and the movements that usually follow are quite sharp. In this context, in the event of an upside breakout of the falling trend line, it is highly likely that the price will suddenly accelerate rapidly and make a big move to the upside. On the other hand, the volume profile may also support this possible breakout. If there has been a slight increase in trading volume on recent approaches to the downtrend line, this indicates that buying appetite has increased, and traders have started to pre-price this important breakout. Volume support, especially on trend breakouts, is crucial for the permanence of the move. Therefore, an upside breakout combined with volume generates a strong technical signal. Finally, it should be noted that although the price failed to break through the falling trend line in this last attempt, this process should be followed with hope, not complete despair. Because the fact that the price has repeatedly come to these levels shows that the buying pressure is alive, that the market sees this trend line not as a psychological barrier, but as a technical obstacle that needs to be overcome. This suggests that the uptrend is actually a matter of time. When the breakout occurs, it won't just be a technical level breach, it will also be a turning point in market psychology. When the price breaks this falling trend line, many traders will perceive it as the start of a new trend, which could lead to an explosion of buying. The trend reversal will be clearly confirmed, especially if the price does not retreat after this breakout and heads directly to the upper levels. But we cannot decide the analysis only by trends. Let's look at other metrics. Stay tuned. A remarkable and highly significant technical structure has formed on the chart, the descending wedge pattern. This pattern is known as a harbinger of a positive development, especially in the world of technical analysis. Descending wedges are characterized by price action that narrows over time, and although they usually form within a downtrend, the nature of these patterns is such that they are likely to result in a change of direction. In short, a narrowing downward oscillation of the price, gathering strength, can then set the stage for a sudden and sharp breakout to the upside. This descending wedge has been tested many times in past price action, and its boundaries have been clearly defined. The lower band, the support line, has acted as a buffer against price declines, and the price has reacted upwards after each contact. The upper band, the resistance line, represents the area where sellers come into play and the price is pressured again. However, the most important thing to note is that this resistance line is likely to weaken with each passing contact. In technical analysis, the more a resistance or support line is touched, the more likely it is to break. In this context, the fact that the price is stuck in this wedge structure and the volume is gradually decreasing can be interpreted as the market taking a deep breath before a big move. In other words, the current squeeze should not be seen as an uncertainty, but rather as a preparatory process for a new and strong directional move. Especially in descending wedge patterns, these squeezes are very common before upside breakouts. Therefore, a new attack on the technical upper boundary of this structure can give clear signals about the direction of the price. Historically, descending wedge structures have often signaled the end of downtrends and the beginning of a new uptrend. This is because during these structures, selling pressure begins to fade and buyers gradually enter the market. While the narrowing of the wedge limits price movements, it also psychologically prepares market participants for a breakout. This increases the likelihood of a strong and bullish rally when the breakout moment arrives. In the current situation, if the price breaks this descending wedge to the upside, the long-suppressed desire to buy can be quickly unleashed. Such breakouts are usually accompanied by an increase in volume, and the price can move up quickly, almost ignoring past resistance levels. Especially during the breakout of technical patterns, the potential for price acceleration is quite high, with both algorithmic trading and manual traders opening positions. On the other hand, the fact that each new low made by the price within this wedge structure is higher than the previous one also indicates that buyers are now stronger and sellers are getting weaker. In technical analysis, this is called rising lows and is often an early harbinger of a trend change. The occurrence of such rising lows within the descending wedge is a factor that further increases the probability of an upside breakout. It's important to note that in descending wedge structures, the breakout is usually closer to the upper band as the number of contacts increases. This means that every time the price approaches this resistance line, it tries to break through it more decisively and strongly. Especially in the recent period, the fact that the price has approached this upper band suggests that a great opportunity for investors is about to open. However, one of the most important strategies in descending wedge structures is to be patient and careful, and to be able to accurately track the moment of the breakout, because such structures test the investor before the breakout. Sometimes the price gets stuck in a very narrow range within the wedge, causing impatient traders to make a premature move. However, those who are patient can take safer and stronger positions when the breakout is supported by volume. The RSI indicator, which is one of the most prominent indicators on the chart and provides very important signals for technical analysis, has finally broken through its long-standing falling trend line. The RSI is one of the most popular momentum indicators used by traders to measure buying and selling power, and trend breakouts on this indicator often signal price movements in advance, providing early positioning opportunities. In this regard, we've studied the RSI many times before, and a breakout to the upside of this falling trend line, which has a significant impact on determining the direction of price, is a clear indication that the market is starting to take a different tone. First of all, it's worth noting that this falling trend line on the RSI has been acting as resistance for some time, having been formed by combining past tops. Every time an RSI top touched this line, the indicator would turn downwards, leading the decline. But now the line has been broken to the upside with a strong candle. This gives traders hope in technical analysis, because such a breakout on the RSI usually indicates that the price is preparing for a new wave to the upside. That's why it's important to follow the RSI. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. See you soon.